Texas lawmakers are signaling some support for Bitcoin mining. They recently passed 2 bills that embrace mining and stopped another that was dubbed the Anti-Bitcoin Mining Bill. Joining us now to discuss is Marathon Digital Holdings CEO Fred Thiel. Fred, welcome to the show.
Thank you. Great to be here.
All right, let's talk about that bill. If signed into law, one of the bills would require miners with a certain energy capacity to register with the Public Utilities Commission of Texas as large load operators. The second will introduce tax exemptions from companies that use otherwise wasted gas. Marathon has mining sites in Texas, so explain how this is going to impact your business.
Essentially fairly minimal impact. The one law, HB 591, is the tax abatement. That has to do with using wasted gas. In our case, we sit behind the meter at a wind farm, so we're primarily using wind energy, and when we don't use wind energy, we supplement with grid energy. So that doesn't have a direct impact on us per se, but it does help miners who essentially are using flare gas in oil fields, which is a great thing because methane gas is 80 times more damaging to the environment than carbon dioxide. SB 1929 had to do with large flexible loads. So this is essentially miners will register with ERCOT. In this way, they essentially are signed into the program for large flexible loads where ERCOT is able to send signals to them to curtail. And this is part of how the load balancing of the grid works with Bitcoin miners. Many opponents to Bitcoin miners in Texas, for example, those that were behind SB 1751, are essentially the owners of peaker plants. And if you think about the grid as plumbing, you can either shut down a consumption somewhere else to give excess electricity to consumers, or you can turn on more capacity. The peaker plant owners are the type that run gas-fired plants that turn on capacity when demand goes up. It's much better for the environment and for the grid that Bitcoin miners just shut down when demand goes up. And so it's a much more symbiotic benefit to consumers and to the grid in Texas. So we're very happy that all these laws ended up having the outcomes that they did.
You know, staying in Texas, we're going to hop a bit around the world here when we talk to you, but let's stay in Texas for now. We know that you're developing new mining sites there. How is that coming along?
That's great. All of the capacity that we had planned for Texas is ready to go. We have one site in Garden City, which is all racked and loaded, ready to go, and we're just waiting for final authorization from the grid operator, Encore, to turn on that site. Other than that, we are fully loaded in Texas and finishing out our build out in North Dakota and then UAE and other parts of the world.
Yeah, we'll ask about some stuff going on in the UAE and also Montana. But before we do, we just talked about Texas. Throughout North America, it's kind of an interesting thing, right? You know, one of the biggest sources of renewable energy is actually upstate New York. People don't realize it's super cheap there, thanks to Robert Moses back in the day. Very few people always say thanks to Robert Moses, thankfully. But nonetheless, it's New York State has done a lot to stop mining and to discourage mining in that place. Any other place in North America where you think has a lot of potential but is being essentially unattractive for Bitcoin miners and the like right now to operate in?
Well, I think that you have a lot of stranded energy in different places, and that energy comes in different forms. You have new nuclear plants, for example, that have come online in Georgia, where Bitcoin miners have acted as a type of baseload consumer there. You have a lot of new wind energy that's come online in North Dakota, where we operate as well, which is coming online. You have the opportunity for lots of geothermal energy in states like Wyoming, where, for example, they just haven't built out that infrastructure. California is doing some interesting things where they're essentially working on generation of energy at the edge. So instead of a hub and spoke model where you're generating energy at a major utility and then pumping it out over transmission lines, you generate energy at the community level using solar, batteries, and a little bit of Bitcoin mining. Now in California, they haven't added the Bitcoin mining part, but we believe that energy generation at the edge, whether it's solar, whether it's burning methane gas on landfills or whatever the energy source may be, is a way that this is going to work in the future. The biggest challenge in this country today is lack of transmission capacity. Think of it as the plumbing that connects the power plant with the consumer. There's over a 2-year backlog for new transmission, over 4 years in some areas. And that means that a lot of these solar and wind projects that are planned can't get done because there's no way for that plant to transmit the electricity to consumer. And I think that's one of the biggest challenges today in the U.S.
Fred, when we took a look at the price of Bitcoin at the top of the show, I alluded to this report. A Matrix Port analyst is suggesting that Bitcoin miners are being forced to liquidate new inventory produced because of compressed profit margins, causing selling pressure at 28,000, like we saw in the chart. Is this what you're experiencing?
No. I mean, our policy this year has been basically we sell part of the Bitcoin that we mine specifically to cover the energy costs and our operating expenses. The cost of capital has gone up over the past 2 years. And so as opposed to in previous years, most Bitcoin miners held their Bitcoin and then either raised money through debt or through equity to cover their operating expenses. Now most Bitcoin miners sell their Bitcoin. In our case, we generated over 1,200 Bitcoin last month and sold about 500. So that gives you an idea of kind of our model. I think other miners that don't produce as much Bitcoin as we do have to sell all that they produce to cover their costs. But this is one of the benefits of scaling. And as miners become sort of industrial, institutional in size, like ourselves and others, gives us the ability and more flexibility to hold Bitcoin and sell when we need it.
That 1,200 number you just mentioned was a 70% increase from the month before. What led to that increase?
So we've been focused on a program of energizing new capacity and optimizing our existing capacity. If you look at the amount of new capacity we added last month, it wasn't very much. What we really have been focused on is optimizing our production. If you listen to kind of some of our prior discussions, we're very focused on our vertical technology stack. I think we're one of the only miners who not only operates our own pool based on our own software, but our own firmware in our miners, our own controller boards, and have co-developed a lot of our own immersion technology. And all of those little optimizations add up to higher uptime, smarter operation of machines, fewer machines that are go down for unplanned downtime, and just really maximizing what we're able to produce based on the amount of electricity we need.
So is that optimization through software? So like if you had to assign percentages, do you think the optimization came from software or hardware?
Primarily through software in our ability to control the output of the machines, the uptime of the machines, scaling up and down the hash rate of the machines. Typically these machines come stock where you can either run them on or off. What we've done is build software that lets you modulate how much you want to run them. And when you run them in eco mode, if you would, that essentially lets you use less electricity and operate in times when maybe electricity prices are very high. So that means you curtail less because you're still able to shed the load, but you're still also able to operate the miners. And then when electricity is very cheap, you can overclock the miners and get more production out of them. So that flexibility allows you to operate in more of the edge cases, which means you get higher uptime over time.
Got it.
Fred, thank you very much for joining us this morning. That was Marathon Digital Holdings CEO, Fred Thiel.